This portion of This Week in Agribusiness is brought to you by Firestone Ag. Harvey Firestone invented the first pneumatic farm tire, forever changing what it means to farm hard. Visit firestoneag.com to learn more about this history and tire solutions for today. We're back talking markets with Chris Robinson of Robinson Ag Marketing. Chris, we talked corn and wheat. Want to get your thoughts here on the soybean market. Again, still holding up following that USDA report, but some weakness apparent. Where do you see beans going from here?
You know, beans have got the only good positive bullish fundamental story, right? We've tighter than needed supplies. I think the big surprise too was the added acres of corn. Well, those acres at least didn't go to soybeans. So the setup is there, I think, for continuing to have decent demand. The Chinese have not been aggressive buyers, but they've been steady, right? It's nothing to write home about. We've kind of met our goals there, not so much for corn and wheat. People keep saying that at some point, the Chinese just did a huge amount of stimulus in their economy to try to save their real estate. Yeah. So that money may eventually find its way here, especially it depends on what happens with the South American crop. And at the end of the day, soybeans were the best performing row crop this year, right? And we had a $3 range. You could have sold it at $11.30 or $14.35. A lot of people like to say, well, what's a good cash sale? What's a bad cash sale? Anything north of $13.30 puts you in the upper one-third of prices. Okay. We were just there. Now we're dancing around $13 today. We've had a slide here. That's the thing with soybeans. We talked earlier, when we get these rallies, you've got to be willing to reward them somehow, either with a cash sale or a hedge. Now we have to see if $13 hold. That's going to be the biggie. We did go as low as like $12.80. We may go back down there and retest that $12.80 level. But right now, this $13 level is big. $13 attracts a lot of attention. A round number. It's a 100-day moving average right down there. So hopefully, this correction's behind us. Now we're heading into harvest, and where the rubber meets the road. Maybe this is an opportunity. So I've advised everybody that if you did have $14 hedges on or something, roll them down, cover them. If you sold stuff here, if you're an end user, you want to buy on dollar dips. You don't want to sell on dollar dips. So the calls are cheap right now. Why? Because 3-4 months from now, if the yields aren't there, those cheap calls right now, those can help you. So you want to buy stuff when nobody wants it. That's when I want my clients looking at it.
Well, something that everybody wants right now, Chris, is cattle. We continue to see both that live cattle and that feeder cattle market rally. Live cattle getting close to $200 a hundredweight. Yeah. Where does this cattle market go? Can it stay up here for the remainder of the fall?
It's supply and demand. The herd's too small. Every cattle on feed we've gotten in the last year and a half, doesn't matter what it was, it's a little bit of a blip. We haven't had a correction, a pullback, really since May. So yeah, we're overdue. The one thing about cattle market, I'll say, and I'll just leave it at this, there's ways to hedge. Yeah. Some guys hedge with futures, some guys hedge with options. The last year and a half has been a real primer on why you want to use options, because we've rallied $40, $50 in a year and a half. Anybody that, I don't care where you were, I don't care if you were, had a psychic friend network, anybody that was short futures, you left a lot of money on the table. If you had options, yeah, you paid for the put, you lost the value of the put, but literally this was a year and a half where everybody was said, I probably would have been better off, because if you're farming, you can't be raising animals without a floor, right? Because you can't have you can't wake up one day and have the market fall out of you. Yeah. So it's been a great learning experience for anybody. This is when you want to use puts. At the end of the day, people have lost a ton of money trying to call the tops in cattle. Mm-hmm. I would just say, like everybody else, the trend is your friend. Sit back and wait. Sooner or later, we're going to have a correction. And again, like they always say, nobody gets a text message the day before. You kind of just have to bite the bullet and say, all right, I want to protect this revenue level. And I think that's the way you approach it. Protect the revenue and hope it keeps going higher.
That's the way to do it. Chris Robinson, Robinson Ag Marketing, thanks for joining us this week.
Thank you, sir.